As usual, we're just going to gloss over what's been happening in terms of the intermarket analysis across the other asset classes. So, starting off with wheat, corn, and soybeans, overall they're bearish. Well, they're starting to become bearish because we've been seeing some lower lows being formed and some lower highs, respecting bearish PDAs. Also, commercials are hedging bearishly across the three, so that's that with them. Live cattle, feeder cattle, and lean hogs were in a consolidation for the most part for a lot of the time. Live cattle and feeder cattle have broken out their consolidation to the upside, with the commitment of traders actually supporting this. And then you have lean hogs, which broke out to the downside, with commitment of traders slightly supporting this. And then you have the S&P, the Nasdaq, and Dow Jones futures. Across the three, we're seeing bearish hedging. We are seeing some bearish price action can start to sneak in, and as we know, the indices are probably going to be the closest to moving with foreign currencies and against the dollar. So, with that intermarket analysis done, we can head into the dollar index. I really want to start off on the monthly here just to illustrate that in relation to the last dealing range here, this high to this low, we've basically come back and tapped equilibrium. And from here, what could happen is we could use equilibrium as a support and sort of make an up range, or we could see us, continuing bearish price action and coming down. So those are, the two sort of hypotheses that you can have with this sort of price action, right? Now, the reason why I incline more towards the former rather than the latter is because in the first situation is supported by so many things, right? It's supported by intermarket analysis, whereby we're seeing bearish price action creeping in on the indices, and also across some of the commodities as well, which are typically inversely proportional to the dollar. And also, I won't show you guys, but if you guys look at your charts, you can see that we have hit a monthly bearish PDA on the euro specifically, which is what I trade, what I follow. In terms of foreign currencies, we have hit a bearish monthly PDA, which is going to be quite strong and something that price is likely to respect. And also for continuing the macro bearishness, it's basically high time for the euro to be forming another lower high, and sort of seeking further downside. So if we go into the weekly chart, we can actually see a bit more clearly what is going on here with the dollar. So as we can see, it seems as though we've tapped in to an area of bullishness. Specifically, what do we have here? We have a failure swing right here, and this leaves behind what? This bullish mitigation block in here. This bullish mitigation block in here. Now price comes down into this weekly bullish mitigation block, and we see a reaction. It doesn't seem as pronounced. It doesn't seem that pronounced when you look at it on the weekly chart, but if we go down to the daily, you actually see that it's a lot more pronounced than we think it is. So as we can see, we came down here on the daily chart on Thursday, and then we had a sharp reaction going upwards into Friday, and then some consolidation above the closing of Thursday's bullish price action on the dollar. And then going down to the 4 hour, which is where I think the real juice of this analysis is, right? And why it supports the first situation over the second situation, of us actually being at the end of the retracement, or coming towards the end of the retracement and starting to see a bullish range. is because we're seeing here like it wants to form a failure swing of some sort. It looks like it wants to form a swing here. Now, obviously, it's still too early to tell. This could just be, the continuation of bearish price action. But if you look in here, it comes right into this 4-hour level in here. What we discussed was our weekly mitigation block in here, and it respects it nicely and comes up here, and we see that it might be showing an unwillingness to go lower. For me, what would really like tell me yes, the dollar is flipping bullish, is if we could close above this high here. If we were to take this high here, then that would classify for me as a new high, or even this high here. That would classify for me as a new high, and that would signal that we are at the end of our retracement, and we're probably going to be going into bullish territory. Seeing as we're at the end of the month, a month's retracement is quite befitting, in my opinion, for the price action of the dollar that's been going on and with the overall narrative. So with that being said, the weekly expansion that I'm expecting is one of two, but the first is the stronger case, in my opinion. The first case is that we see a bullish range for this week. Some consolidation Monday through Tuesday, and Monday, Tuesday, maybe Wednesday, and I'll tell you why when we go over and view the economic calendar. And then I'm expecting possibly a New York reversal and a large bullish range on Thursday, and that continued bullish momentum on Friday. So that's what I'm expecting for this upcoming week. And then the other scenario would be if we could actually, let's say, form even a breaker swing here and like have some more downside. We could have some more downside, form a breaker swing in here, get deeper into that weekly mitigation, which is going to be around in this area, and respect it, form that breaker swing, and then form the upside, in which case that would be more of a down range for the week overall, but then still expecting bullishness on Thursday and Friday, and all will become clear once we look at the economic calendar. We see FOMC FOMC speaking at 9 a.m. We see on Tuesday the Treasury speaking, news for the euro, more FOMC speaking. But these events that are coming out that you say, you could trade them, in theory, yes. But the reason why I would hold off on trading them is because of FOMC meeting minutes, which is going to happen on the Wednesday, and all of this high impact news that's happening on Thursday and Friday, in such a sudden way, which leads me to believe that the market is likely to be waiting for those news events to come out and essentially dictate and clarify the direction of price over this week. So I would say Monday, Tuesday are like more likely to consolidate, and then Wednesday you could see some sort of London move and like a little let's say New York London close move, but the large portion and the lion's portion of the weekly range is likely to form on the Thursday and the Friday, and that's where I think our reversal is likely to happen, and then continuing that reversal move on Friday. But as usual, we're going to watch Sunday Open to see which way Sunday opens and goes towards, because that is, in our open, high, low, close theory, that is going to be an indication as to where we can likely see this weekly expansion actually take us and add or subtract from our speculations.